Welcome to the Deep Dive. We cut through the noise to bring you clear insights on complex global topics.
And today we're looking at something pretty fascinating. The whole global financial system seems to be at a crossroads, doesn't it?
It really does, especially with digital assets like Bitcoin changing the game, redefining, well, wealth, maybe even national sovereignty.
Precisely. And that brings us to today's deep dive. Luxembourg. A small nation, yes, but a real powerhouse in finance.
And they're considering a seriously bold move.
Yeah, adopting Bitcoin as a strategic national reserve asset. We're going to unpack the arguments for why this very influential nation might actually do this.
So our mission today is to really get into the key points from a recent paper on this, giving you a clear picture of why Luxembourg might want to be a pioneer here.
And it's not just talk. The paper highlighted something from just last month, June 2025.
Oh yeah, that Coinbase MiCA license. Luxembourg's regulator gave Coinbase a crucial license. Why is that such a big deal right now?
Well, Micah, the Markets in Crypto Assets Regulation, it's this major new EU framework. It's really groundbreaking.
Okay.
So Luxembourg granting this license, especially to a big player like Coinbase, it's a huge signal. It shows they're serious about legitimizing crypto.
More than just participating, maybe.
Oh, absolutely. It positions them to potentially set a global standard. It shows this is happening now.
Right. And Bitcoin itself, it's clearly come a long way from being like a niche digital experiment.
Definitely. We're talking a $2.4 trillion market cap. That's not just speculation. It's backed by real data, real shifts in global finance.
And the institutions seem to agree.
Yeah, the institutional embrace is really picking up steam. Over 2,600 institutions already hold more than 3 million Bitcoin.
Wow, 3 million. What percentage is that?
That's about 14% of the total 21 million coins that will ever exist. And by June 2025, institutional holdings hit around $350 billion.
$350 billion held by institutions across corporations, hedge funds, pension funds.
ETFs, even some governments. It's broad.
It really ties into that digital gold idea, doesn't it?
It does. The metaphor works pretty well. Bitcoin's hard-coded limit, that 21 million coin cap, it mirrors the scarcity of gold.
Making it decentralized, inflation-resistant.
Exactly. Digital gold. And what's interesting from the paper is the idea that this adoption isn't just driven by fear, like a typical safe haven.
Oh. What's driving it, then?
It seems to be more about sophisticated financial thinking, reevaluating what a truly global neutral asset looks like. Holding Bitcoin today is sort of like holding gold used to be a hedge.
A hedge against uncertainty. Though not everyone's convinced, right? Like the ECB, the IMF.
True. There's still skepticism from some traditional institutions, maybe clinging to older views, you could say.
But others are jumping in?
Big time. Visionaries like Larry Fink at BlackRock, he's fully embraced Bitcoin's potential, calls it an international asset.
And the Coinbase CEO, Brian Armstrong.
He put it bluntly, Bitcoin is going to take over as a reserve currency. Pretty bold statement.
Very bold. Do the numbers back that up, the growth rates?
Well, the current pace is startling. Projections suggest institutional holdings could reach 35%, maybe even 45% of the total supply in just the next 18 to 24 months.
That's incredibly fast.
It really is.
Yeah.
And we see it in corporate actions, too.
Yeah.
Nearly 150 publicly traded companies held Bitcoin on their balance sheets as of July 2025.
And not just holding, but actively buying.
Actively buying.
Yeah.
They see it as a better store of value than cash or bonds. In Q2 2025 alone, public companies snapped up 159,000 BTC.
More than the ETFs.
Yeah, outpacing ETF inflows for the third quarter in a row, actually.
Speaking of ETFs, they're a huge part of the story, too. BlackRock's IBIT fund.
Became the fastest growing fund in history, period. Racked up $80 billion in assets under management since starting in 2024.
$80 billion. Faster than any other ETF launch ever.
And U.S. spot Bitcoin ETFs overall. They saw back-to-back days with over $1 billion in inflows just this July. Total net assets pushed past $158 billion.
It's not just companies and funds either, is it? What about countries?
We're seeing signs there, too. Early moves from places like Bhutan, the UAE, even the U.S. and China have some holdings. And, of course, El Salvador. It points to a wider trend.
Okay, so the big picture is this huge institutional wave is kind of washing away that old speculative asset label. Broad adoption feels almost inevitable now.
That seems to be the argument, yes. Which brings us back to Luxembourg. Why them specifically? The paper lays out 5 core strategic reasons.
All right, let's dig into those. What's argument number 1?
First up, using Bitcoin as a diversifying asset for economic stability.
Okay, explain that. Luxembourg's economy is strong, but heavily tied to finance and the Eurozone.
Exactly. That reliance makes it vulnerable, vulnerable to global market swings, vulnerable to monetary policy set by the ECB in Frankfurt.
So how does Bitcoin help? Is it just another asset?
No, it's fundamentally different.
Mhm.
Because it's decentralized and finite, it's largely uncorrelated with traditional markets. It acts as a hedge against those specific Eurozone or financial sector risks.
And the inflation aspect.
Crucial. That fixed supply of 21 million coins is a built-in protection against inflation and fiat currency losing value, especially with all the money printing and debt we see globally.
Plus, the historical returns have been pretty good, despite the volatility.
Very good, historically. And while volatility is definitely still there, the argument is that it's decreasing as the market matures and institutions come in. More stability over time.
Makes sense. What's the second argument?
Enhancing treasury management.
Yeah.
Basically, good treasury management is about balancing liquidity, safety, and returns, right? While minimizing risk.
Standard practice. So how does Bitcoin fit?
Again, diversification. Bitcoin's low correlation to bonds, stocks, fiat currencies, it reduces the overall risk of the national treasury portfolio.
Especially when interest rates are low.
Precisely. When traditional bonds aren't yielding much, Bitcoin offers a way to potentially optimize risk-adjusted returns. Plus, there's the potential for long-term growth, which helps preserve and grow national wealth.
And Luxembourg already knows how to handle complex assets.
They absolutely do. Their expertise in finance means they're well-suited to manage Bitcoin strategies, whether it's dollar cost averaging, custody solutions, whatever it might be.
Okay, argument 3 feels very Luxembourg, enhancing their legacy of financial innovation.
Right. They've always been ahead of the curve. Pioneering investment funds way back, embracing blockchain more recently.
So a Bitcoin reserve would be another step in that journey.
A major step. It would cement their position as a trailblazer in the digital economy. It sends a powerful message. We're open, we're leading.
And that could attract business.
Definitely. Blockchain companies, crypto startups, institutional investors, they might see Luxembourg as the place to be, which further diversifies their economy.
And they have the regulatory groundwork already.
They do. Their 2020 framework for virtual assets, the AML-CFT rules, provides a solid base. Plus, their experience managing alternative assets, custody, cybersecurity, they could build a really robust framework for a Bitcoin reserve. Maybe even set a global standard.
Leading by example. Okay, argument 4 builds on that, attracting global investment and talent.
Yeah. If Luxembourg holds Bitcoin strategically, it becomes a magnet for crypto investment. Investors want jurisdictions with clear rules and a friendly stance.
And that means jobs, innovation.
All of the above. More jobs, more innovation, potentially more tax revenue. And it attracts talent, tech experts, finance pros, cybersecurity specialists. It becomes a hub.
And good for their wealth management sector, too.
Absolutely. High net worth individuals, family offices, more and more are putting Bitcoin in their portfolios. If Luxembourg embraces it, it strengthens their appeal in that massive global fund industry they dominate.
All right, fifth and final argument, mitigating geopolitical and economic risks. How does Bitcoin help there?
This one's about financial sovereignty. Bitcoin isn't controlled by any single government or central bank. It's decentralized.
So it's outside the traditional system.
In a way, yes. For a country like Luxembourg, holding Bitcoin could be a buffer, protection against things like trade wars, sanctions, disruptions in the global banking system.
Things that could really impact a small, internationally focused economy.
Exactly. And Bitcoin is borderless. It's liquid, potentially universally accepted. It gives a nation like Luxembourg options, flexibility, without being solely reliant on the euro or the US dollar.
Okay, 5 strong arguments. But how would they actually do it? What's the roadmap look like?
The paper suggests starting pragmatically. Short-term goal, maybe over the next 12 months, build a reserve of 2,000 BTC.
2,000 Bitcoin. How much is that compared to their other reserves?
Interestingly, it's roughly equivalent to their current gold holdings. So a significant step, but maybe not earth-shattering initially. It manages risk while still signaling innovation.
And where does the money come from?
The paper suggests a few avenues. One is using assets from their Seized Assets Bureau, the BGA, which apparently holds about €1 billion.
Okay.
Another is shifting some existing assets and potentially using debt, since Luxembourg has a very healthy debt-to-GDP ratio.
So 2,000 BTC, that's maybe 200 million euros or so at current prices.
Roughly, yes. The point is, acquiring that amount seems quite feasible through those channels.
And long term, what's the bigger vision?
Build up to maybe 1% of GDP over the next 2-3 years. The idea is to benefit from Bitcoin's potential appreciation over time. Some analysts are talking about Bitcoin possibly hitting $1 million by 2030.
Very optimistic.
It is optimistic, but it shows the thinking leverage the potential upside.
What about fitting this into the euro system? That seems like a hurdle.
The paper kind of waves it away with pragmatism, Luxembourgish pragmatism. The suggestion is they'll figure it out, find a practical way to make it work within the existing EU framework.
Okay. Now, we have to address the doubts, the criticisms. Volatility is always the big one with Bitcoin.
It is, and the paper acknowledges it. But again, the argument is that volatility is decreasing as the market matures, as more institutions come in.
It's becoming less wild.
Relatively speaking, yes. Compared to its early days, absolutely. And how does that compare to other big asset shifts historically? Well, we are seeing adoption curves that look a bit like the early internet. The speed of institutional money coming in should theoretically dampen volatility over time.
What about environmental concerns or regulatory uncertainty?
Those are real concerns too. On regulation, though, Luxembourg's already been proactive. They have frameworks in place, they're positioned to navigate complexities, and even push for clearer, harmonized EU rules.
So they see it as manageable risks compared to the strategic upside.
That seems to be the calculation presented, yes.
This really brings up a key question for anyone listening. Why should you care what Luxembourg does? It's a small country.
That's fair. But think about it this way. A nation's strategic reserve isn't just a pile of money. It's more like a really well-stocked emergency kit.
Okay, I like that analogy. An emergency kit.
Yeah. Just like in your own kit, you wouldn't just have one thing, right? You'd have food, water, first aid, maybe even something modern like a solar charger for your phone. Diversification for resilience.
Right. Different tools for different problems.
Exactly. And in today's world, with all the changes, Bitcoin is emerging as this powerful, non-traditional item for that national kit. It offers a different kind of resilience than just euros or gold.
So what Luxembourg decides, it isn't just about them.
Not at all. It's kind of a test case, a litmus test for how nations might adapt to this new era of digital assets. It's about foresight, about finding new ways to build economic resilience.
The paper ends with a really striking thought, almost a warning.
It does. It basically says, in the end, there will be those who hold Bitcoin and those who do not, a divide that could define the financial sovereignty of nations in the decades to come.
Wow. That's quite a statement.
It really is. It frames the choice starkly. Luxembourg, according to this view, has a chance to be on the holding side early, getting the benefits while others might get left behind.
So we've gone pretty deep today looking at why Luxembourg is exploring this really forward-thinking path with a potential Bitcoin strategic reserve.
It's definitely a space to watch. We really encourage you to think about what this means, not just for global finance, but maybe for your own understanding of wealth and stability in the future.
Absolutely. And if you enjoyed this deep dive, please do follow, like, and share us wherever you get your deep dives.
And for more insights like this, make sure to follow What Bitcoin Taught Me on all the platforms: Twitter X, Nostr, Bluesky, Threads, Instagram, Facebook, and LinkedIn.
We'll be back soon with another deep dive.